Institutions are still woefully underexposed to crypto. They're going to be coming into the market. The government now owns Bitcoin, has removed a huge amount of regulatory risk. I think it's the best risk-adjusted moment to buy Bitcoin that I've seen in the market. So, has it pulled back a little bit? Yes. But if we span out and measure since Trump won the election, it's done exceptionally well. And I think its best years are ahead of it.
Matt Hugin begins by pointing out what many investors are just starting to realize. Bitcoin has held up exceptionally well in the face of ongoing macroeconomic turbulence. While many risk assets have pulled back due to volatility in equities, geopolitics, and monetary policy shifts, Bitcoin remains remarkably strong, even brushing up near all-time highs.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think it's held up exceptionally well. I think Bitcoin bulls should be inspired by the performance, and it's set up to rally significantly if we get a period of stability in the broader equity markets. It's worth remembering the last time we had true economic chaos during the start of COVID, Bitcoin wicked down to $5,000 and even below that. Today, we're talking about $80,000. It's a different asset. It has a broader distribution of institutional ownership. And again, I think what it's telling you is once this market volatility stabilizes, we're going to see it return to new all-time highs and then beyond. It's really a display of strength. Look, I think crypto's done just fine. If you measure from the day of the election until today, Bitcoin has vastly outperformed gold, it's outperformed stocks, it's outperformed bonds. It's been a phenomenal investment. I think it's just the canary in the market coal mine. It's been leading the market. So it ran up significantly between the election and inauguration day, pricing in a lot of good news. We got some of that good news, but we also got some volatility, so it paired off a little bit. But when you step back and look at this from a 30,000 foot level, a number of things remain true. Institutions are still woefully underexposed to crypto. They're going to be coming into the market. The government now owns Bitcoin, has removed a huge amount of regulatory risk. I think it's the best risk-adjusted moment to buy Bitcoin that I've seen in the market. So, has it pulled back a little bit? Yes. But if we span out and measure since Trump won the election, it's done exceptionally well. And I think its best years are ahead of it. Here's the bet that most people I speak with want to make. And I speak to financial advisors and family offices and institutions. The thing they have the most confidence in all of crypto isn't this layer one versus that layer one or DeFi versus DePIN. It's that crypto will be more important in the future than it is today. This is like backpedaling 20 years ago and making a broad-based bet on internet search rather than trying to choose between Yahoo or Ask Jeeves or Google. Why not get the broad trend right so that you have that exposure if what you predict long-term happens, which is that crypto, as an industry, 10x's over the next 5 years. That's the thesis I have the most confidence in. If that's what you want to express, you want to do it in a diversified index fund. We've been running the world's largest market cap weighted crypto index fund since 2017, the Bitwise 10. It's over $1 billion today. It's served that purpose for many investors. But I think an ETF that provides that exposure, that gives an easy button for investing in crypto, is going to be a huge win for investors and a huge success in the market. Who wins in this currency war is Bitcoin, right? When I watched all the tariff confusion play out and what will Trump do and what will China do and how many bilateral deals will we negotiate, the thing that's clearest to me from all that is that we should expect the US dollar to move lower, that we're moving from a world of the US dollar being the sole reserve currency to a world with potentially multiple reserve currencies. Bitcoin benefits when fiat currencies go lower. Bitcoin benefits when there's new space for reserve assets. I think it's the cleanest investment response to the chaos and confusion we're seeing from this tariffs, specifically because it's the hedge against fiat currency debasement. And I think we're setting up for that in the US, in China, in Europe, and around the world. And I think investors would be foolish not to have at least some exposure to Bitcoin to hedge themselves from the chaos that's dominating the headlines right now. Yeah, we're really pleased by the reception we've had for these strategies. They write covered calls on leading crypto equities like MicroStrategy or Marathon or Coinbase. The idea is that the defining feature of crypto, one of its defining features is volatility. And how do you translate volatility into an asset? Well, you write calls against volatile positions and you can generate really substantial income. So we've seen strong trading, particularly in the MicroStrategy product, IMIST. I think it's going to have a broad reception from investors who want to have exposure to crypto, but also generate significant yields and significant income over time. Well, you know, the ETF industry is famous for throwing spaghetti against the wall and seeing what sticks. That's happened in every asset class, and it's happening in crypto. I think there is diminishing return to these smaller and smaller assets that you get one-off exposure through to an ETF. But I actually think the largest crypto equity or the largest crypto ETF hasn't even launched yet. I think the killer app in crypto is going to be a diversified index-based exposure. I think that could be as big or maybe even over the long term bigger than Bitcoin only. But certainly, I think that market is still wide open, still to come. Bitwise hopes to play in that space. And I think we'll see many ETFs succeed, some ETFs fail. But I think there are a number of very large crypto ETFs that still haven't launched yet.
Haugen also highlights Ripple's acquisition of prime brokerage firm Hidden Road as one of the biggest crypto acquisitions in recent memory. It reflects a growing need for reliable intermediaries in a still volatile ecosystem. But more importantly, it signals Ripple's intention to push stablecoin adoption deeper into financial infrastructure, with Ripple encouraging the use of its stablecoin as collateral within Hidden Road. The stablecoin race is heating up, and Haugen believes it will be a central storyline in crypto's next chapter.
It has, and especially with the Biden administration being so, at least from crypto advocates, so anti-crypto, this is really unsurprising, similar to Circle finally flipping public that they can make a listing here in New York on the NASDAQ. We are seeing Galaxy Digital shares. They do trade in Canada, up 15%. Guys, biggest day in terms of a gain for the company since right after the election. So a big move. We have seen outside of crypto investors piling into stocks like CRH that are redomiciling and shifting their exchanges, the exchange home to the U.S. So maybe people getting ahead of their skis. But I don't know, Mike, if the long-term vision kind of aligns in your view.
I think Mike picked the right day to change that listing. You know, if he had done it before yesterday's session or the Friday session, it might have been a different story. But
just incredible.
Fired the news into a risk-on market, so good timing.
We have these macro headwinds happening right now, right? Like the tariffs are what they are. There's no way that the crypto industry isn't going to respond in some correlation to what we're seeing with traditional equities. But I think the important thing to focus on is the pullback on Bitcoin in particular was significantly less than what we saw for the equities over the last several trading days. And to me, that indicates, one, the support for the industry is still there, and two, it might start being a little asynchronous in terms of how we view it versus traditional equities. I mean, crypto is borderless, so when you think about the impacts of tariffs, there's not going to be the most material impact, but obviously we're going to follow the kind of the headwinds with the market, but you see this disconnect kind of starting, and I think that's positive in terms of the buy-in and the overall global acceptance and the other alternative things that you can do with this asset class.
You know, Katrina, I'm curious if you're legal officer, so to put your lawyer hat on and think about this dramatic 180 in policy we've seen already so early in the Trump administration. And I'm sure in many ways it makes your job easier to some degree. But I'm also wondering if it makes it different and difficult in other ways. You know, I'm thinking about the story today from the Justice Department, basically scaling back what it does when it comes to crypto crimes and what it considers to be in their wheelhouse for crypto crimes. In a way, does that make it, tougher for firms like Pantera to sort of have to police the industry themselves, to do the more due diligence and not have the government sort of on the case as much?
That's a really interesting question. So to your point, there has been a significant change in policy from the administration since January 20th, right? Like all these cases continue to be dropped. Changes in terms of staffing at the SEC, the DOJ, to your point, terminated its crypto task force this morning with a pretty aggressively worded memo, actually, kind of criticizing the prior administration. To answer your question, no, I don't think it makes anything significantly more difficult in terms of policing. I think that the agencies are still there, the frameworks are still there, the enforcement divisions are still there. I think what we've seen is a pullback on the crypto-specific regulation regulation by enforcement of the prior administration, and I don't think that's a bad thing. I think that's going to foster innovation, and that's going to allow us to build the right rulemaking framework with the right partners at the table going forward. I think that the American public is going to kind of figure out what the meme coin situation is. I don't know that we necessarily are overly focused on it. There's always going to be something that comes out that's got a little bit of hype on it, that's got a little bit of attention, but overall, the broader blockchain and crypto industry is a real asset class, and it is subject to regulation by various agencies, right? You have the SEC, the CFTC potentially coming into play here, and then obviously the DOJ and the other criminal agencies are not going anywhere. So, I expect there to just be continued institutional buy-in and adoption, and that will just further sophisticate our asset class.
Well, it's a big deal in the crypto world. That's Ripple's biggest acquisition. I think it's one of the biggest crypto acquisitions in history. And it really speaks, I think, to that idea of a prime brokerage in the crypto world. I don't think people really realize that they are in play in crypto, especially since FTX. There's been a lot of demand for sort of a trusted party to stand in between the wild ecosystem of crypto and your own accounts. And Hidden Road, it has a pretty good pedigree. Mark Ashe used to work for Steve Cohen at SEC Capital and Point72. So a pretty fascinating deal. And to me, one of the really interesting elements of it is Ripple really seems to want to use this deal to broaden adoption of their own stablecoin. They're going to encourage the use of their stablecoin on Hidden Road as collateral and whatnot. So a lot of the stories in crypto these days sort of circle back to that stablecoin idea.
Matt Hugin offers one of the most balanced, intelligent, and forward-looking assessments of the crypto market today. His message is simple but powerful. Bitcoin is strong. Institutional capital is still early. Regulatory risks are declining, and the crypto industry is setting up not for a fad or trend, but a foundational shift in global finance. For those who want to play the long game, Hugin urges a focus on diversification, macro thinking, and strategic exposure. Whether through Bitcoin, income-generating strategies, or a future ETF that captures the full scope of the crypto market, the opportunity remains vast. Please like and subscribe.